Good afternoon. This is Mike Feiner from Major League Investments. This has certainly been a very challenging week on Wall Street. Today is Friday, August 19, 2011, and it's about 5 o'clock in the afternoon. Beginning this week, the European banks reported that they potentially had certain toxic assets, which was a déjà vu to the U.S. banking crisis of 2008 and 2009. As a result, the market sold off, believing that there could be a big problem in Europe. Following that, there was a consensus that the U.S. has not been expanding at the same rate that it had been projected in the first and second quarter, and that we could risk a recession. Also, Hewlett-Packard announced tepid earnings and a questionable strategic plan, and its stock got crushed today, Friday. As a result, the markets ended down today almost 172 points and started to cause a bad attitude on Wall Street. However, there are certain asset classes that did well today, to include silver, gold, certain precious metals, and other currencies. As a result, it is important that when families and individuals and businesses invest assets, that they take a look at multiple asset classes. At Major League Investments, for example, we use 6 asset classes: bonds, stocks, commodities, metals, real estate, and currencies. As a result, when one asset class goes down, for example equities today, other asset classes went up, such as silver and gold. As a result, we're taking a look at whether we need to reallocate certain assets for next week or for the future. I do believe that the economy will expand in the fourth quarter once jobs growth does pick up. For that reason, we're taking a look at adding to certain asset classes that are taking an absolute beating, certain dividend-paying stocks and other assets that could do well in an economic expansion. This is somewhat contrary to the current popular belief, but that's the idea: buy low, sell high. Think about taking a look at your own asset classes to see what things may be an opportunity to buy, but of course it depends on your time horizon. It depends on your risk profile. But stay tuned. Take a look at the economic outlook in the future. We'll talk to you next week.